Hello and welcome to interest.co.nz. I'm Gareth Vaughan and I'm here today with another one of our double shot interviews where we speak to a CEO or a politician or someone we think is of interest. And today I've got Ross Smith, the Chief Executive of SBS Bank with me. Welcome, Ross, to interest.co.nz. Now, obviously the big thing that you're doing at the moment is working on your community bank plans. You're talking to the Hastings Building Society about a merger. What's driving these plans?
Well, we gained bank registration about 18 months ago with the intention of becoming a national player in the banking scene. We feel that there is an obvious need for more New Zealand-owned banks in the country, and our point of difference really is that we're mutually owned, so our customers own us, and we feel that that's got significant value as an attractor for new customers.
And I mean, how far progressed are the talks with Hastings?
Well, we've already signed a heads of agreement, and from our perspective, our board has approved the go forward. Their board has approved it and now has to go to their members, and they have a special meeting scheduled for the 31st of August, and at that time their members will vote on the merger, and providing we can get 75% approval at that meeting, then it will proceed, and we're rather hoping that we can have it a deal done on the 1st of October.
Okay, and I assume there's also plans to perhaps talk to other building societies and entities around the country to join as well?
Yeah. It's fair to say that we don't take an aggressive or an assertive stance in our discussions, but all of the particularly mutual building societies are aware of our plans to create a national mutually owned bank. So we certainly would entertain discussions with all of them, and they're free to come and talk with us whenever they wish. And there are a number of them out there that are aligned to us in terms of their values. So,
are you actively talking to any others at this point?
No, but that's not to say that we haven't in the past. We've talked to a number of the mutuals, and we've said, look, if there's a time when you feel that the future is that uncertain that you want to get back in discussion with us, then we'd be certainly open to discussions.
I think I saw somewhere the Nelson and Wairarapa building societies mentioned as potential partners. Are they ones you'd see that would fit with you?
Well, they are, but again, we're not in discussions with them, and again, it's because they're both mutuals, and they're aligned in terms of the values. So they would be ideal partners for us, and we'd be happy to get around the table and talk with them if they chose to.
Is it just the mutually owned building societies, or I mean, we've got, say, PSIS, a cooperative. Could someone like that be a potential partner as well?
They could, because the same values underlie their sort of ownership. But again, we're not in discussions with PSIS, and but it is something that may well occur sometime in the future.
And has the plans for the Heartland Bank with PGC and the Canterbury and Southern Cross building societies, has that been a factor at all in encouraging you to go down this path?
No, not at all. You know, we've been in discussions informally for some time, so it's certainly nothing. It's not been a stimulus for us to announce our discussions with the HBS. They're a little different to us. While two of them are building societies, they are corporate-based building societies, so they're a little different. And you know, while we could have entertained discussions with them, and we have had brief discussions with both of them in the past, we just felt that the alignment of our values was different. Nothing wrong with their organisations, it's just that they're a different structure, and we agreed that probably best to go our separate ways.
So with HBS, I mean, will SBS retain ultimate control of a combined entity? How will the process actually work?
They're approximately 10% of our assets, so they're quite a lot smaller than us, and the structure will be that they will merge their assets into our business. So the remaining organisation will be the Southland Building Society or SBS Bank, and they will cease to exist from that time on. We have agreed that we will be endeavouring to retain their brand and their market for so long as they have a franchise in that. And we believe that as we develop a community model throughout the country, there is value in retaining some regional name attached to the underlying bank.
So you won't be actually adopting the name Community Bank or anything like that for the combined group?
We may. We haven't made a decision on that. And I guess in some respects it's going to depend on what happens post the SBS merger, in that if we are in discussions with other regionally based organisations, there may be some value in looking at a more generic name underneath it and then that regional tag alongside. So we wouldn't rule out any name change at this stage.
And where do you ultimately see this community bank? I mean, what particular markets do you think you'll target, and do you see eventually it will have a presence all over the country or certain regions?
Ideally, we see ourselves as filling the gap that was vacated by the old trust banks. And in my day, when we grew up, we opened an account with Trust Bank, whoever. In my case, it was the Canterbury Savings Bank, and in other places it might have been Otago, Southland or Auckland. We see that there is still a gap there, and so we will be aiming mainly at the mum and dad customers, the retail banking. We're not focused on business banking at this stage. We do have a sector within our business in terms of the agribusiness that we are catering for that. But at this stage, it's the retail customer and filling that gap that we think has been left.
Yeah, I mean, the agricultural sector obviously is a very important one to New Zealand, and it's very interesting at the moment. We're hearing anecdotally that some of the bigger banks are pulling back from that sector. Are you getting a lot of interest from people in that sector who want to bring their business to you at the moment?
It's fair to say at the moment we're probably turning down more opportunities than we're approving in the agri sector, because there are a number of them under stress. And in some ways, I guess that's the aggressive nature of maybe some of the banks and some of the borrowers in the mid-2000s, the 2006, 2007 range, and are over-geared, and prices are volatile, and they should gear accordingly.
So you're still pretty cautious about that sector?
We are. There's no doubt about it. I mean, we don't have a huge number of exposures in the high-geared dairy area, which you might have expected given the increase in the Southland province, but we're not overly exposed in that area at the high gearing end, so it's not too bad for us.
I guess stepping outside of SBS Bank, I mean, how big of a concern for New Zealand, for the New Zealand economy, is the situation with debt in the agricultural farming sector at the moment?
Well, I think it has to be a little bit of a concern. There is significant volatility in pricing, mainly because we're so reliant on the overseas markets and the underlying currencies that they're buying in. And I guess that those investing in the businesses just have to be a little bit more cautious in the future and make certain that they can service that debt. But in saying that, I think some of the banks were probably a little over-aggressive in wanting to lend to them as well.
Mm-hmm. Obviously, in the banking sector at the moment, it's a pretty interesting picture, I guess is one way of putting it. Funding costs are increasing for the big players. Obviously, we've got the Reserve Bank's core funding ratio that was introduced recently. There's a bigger battle as a consequence of that for deposits around the country. How is it all panning out for SBS? What does all that mean for you?
Well, we're in the same market, so it has the same impact on us, and there's no question it is compressing margins. All of the banks, because of the new liquidity requirements, are very aggressive in retaining their core funding ratios. And I guess if you look back at the past 10 years, we have seen a decline in that underlying retail core funding ratio, and the Reserve Bank has moved to get it back to a more reasonable level. And as a consequence, everyone is fighting for investments right at the moment. Mm-hmm. And
do you expect it'll get even tougher in coming months?
I rather hope not, but there are no signs out there that it's going to ease in the short term.
And the core funding ratio itself, I mean, that's not something that you have difficulties with meeting
No.
that 65? No.
No, I mean, we're sort of closer to 90% than we are to 65, but that's the nature of our business. And we've never funded offshore, so it's never been an issue for us.
And no plans to?
No plans at all.
Okay, well, that's Ross Smith, the Chief Executive of SBS Bank, and I'm Gareth Vaughan from interest.co.nz.